Good.
So, good afternoon, ladies and gentlemen. Welcome you all to the 2Q FY23 results conference call of Sagar Cements Limited. We have with us from the management Mr. Srikanth Reddy, Joint Managing Director, Mr. K. Prasad, CFO, Mr. Rajesh Singh, CMO, and Mr. Soundarajan, the Company Secretary. We will start today's session with opening remarks from the management and then will be followed by a Q&A session. I request all the participants to be on mute mode during the course of the call. I would now like to hand over the call to Mr. Gavin Disa of CDR for his opening remarks. Over to you, Gavin.
Well, thank you, Manish, and thank you for introducing the management. I'd just like to add that some of the statements made in today's discussions may be forward-looking in nature, and a note to this effect was shared in the invite that was shared with you earlier. We've emailed the communications and trust you received them. I'd like now hand over to Mr. Reddy to make his opening remarks. Over to you, Srikanth.
Thank you, Gavin. Good afternoon, everyone, and welcome to Sagar Cements earnings call for the quarter ended 30th of September 2022. Let me begin the discussions with a brief overview of the market in terms of the demand and pricing, post which I will move on to Sagar-specific developments. Overall external environment for the business remained a bit challenging, while Q2 is seasonally a soft quarter given the monsoons. The business had come to operate in an inflationary environment. While the demand momentum was expectedly soft, we did witness some revival towards the end of the quarter, aided by pickup in infrastructure and low-cost, affordable housing segments. As far as pricing is concerned, while the same remained relatively steady across our key markets, we couldn't undertake requisite revisions to offset the rising input prices amidst benign demand. As far as the trend between trade and non-trade segment is concerned, prices were relatively stable in the former rather than the latter. However, we are witnessing some softening in prices of key raw materials. Whether the trend would continue going forward or we will once again see firming up of input prices, only time will tell. But as far as realizations are concerned, we expect the same to improve with the pickup in demand over the coming months and quarters. Moving on to Sagar-specific developments, our revenue for the quarter stood at rupees 475 crores as against rupees 369 crores during the quarter, higher by almost 29% on a YOY basis, driven largely by volumes following commissioning of the new capacities. Average realizations remained largely stable during the quarter. Overall demand, as I mentioned, was relatively softer, largely owing to monsoons. However, we did witness some pickup towards the end of the quarter. The EBITDA for the quarter stood at rupees 6 crores as against rupees 61 crore generated during Q2 FY22, lower by 91%, largely owing to higher input prices. Margin for the current period stood at 1% as against around 16% reported during the corresponding period last year. Raw material prices were fairly stubborn during Q2, which resulted in margin compression of almost 1500 basis points. We have seen an unprecedented surge in prices of key raw materials, which were aggravated following the Russia-Ukraine crisis. Although the prices of few raw materials have started to trend lower, one needs to see if the moderation continues in coming months. Average fuel cost stood at rupees 2066 per ton as against rupees 1263 per ton reported during Q2 FY22. Elevated prices of coal and coke resulted in higher per ton cost of fuel for the quarter. Freight cost for the quarter stood at rupees 797 per ton as against rupees 795 per ton during Q2 FY22. Loss after tax for the quarter stood at rupees 49 crore as against a profit of 20 crore reported during Q2 FY22. From an operational point of view, Mattampally plant operated at 50% utilization, while Gudipadu and Bayyavaram, Zeerabad and Jajpur operated at 93, 64, 30 and 10% respectively during the quarter. Overall capacity utilization at a group level stood at around 49%. As far as the key balance sheet items are concerned, the gross debt as on 30th of September 2022 stood at rupees 1486 crore, out of which rupees 1275 crore is long-term debt and the remaining constitutes the working capital. The net worth of the company on a consolidated basis on 30th of September 2022 stood at rupees 1581 crore. Debt equity ratio stands at 0.81:1. Cash and bank balances were at rupees 308 crores as on 30th of September 2022. To conclude, I would just like to reiterate that rising raw material prices may pose near-term challenges with regards to profitability. In long run, though, we believe the anomaly will correct with pickup in demand and improving realization. As far as Sagar is concerned, we believe our diversified presence, higher scale, better product mix, and strong balance sheet positions help to create a value for our shareholders over a long term. That concludes my opening remarks. We would now be glad to take any questions that you may have. Thank you.
Thank you, sir. We will now begin the Q&A session. A reminder to all participants, you can ask your question by raise of hands in the participant tab of the Zoom platform. We will wait for a moment for the question queue. The first question is from Shravan Shah. Please go ahead.
Thank you, sir. Sir, the first question is just to confirming the guidance. So 5 million volume guidance that we gave, and that to 3.5 to 3.6 million ton from the existing and the remaining from the new plants. But if I look at the till now, the our own old plants is giving a better volume. So do we maintain the same 5 million ton volume guidance? And in terms of the share from the new plants, both the MP and Odisha plant, can be slightly lower?
Yeah. Good morning, Shravan. See, now talking about the overall target, I think we achieved 2.22 million for the first half. For 5 million for the overall year, probably it is too soon for us to rule out. It looks high probability. Having said that, yeah, we are maintaining the same stance for Sadguru plant, that is the MP plant, at close to 6 million, 0.6 million. But Jajpur looks to be difficult. We have indicated around 0.4 million. Probably we should be doing close to around 0.25 million. Having said that, the other assets did perform reasonably well. So we would want to take the corrective steps or know exactly what we would do end of this current quarter, that is the end of Q3, we will be in a better position. But worst, we expect that we would not go below 4.75 million at this point of time, Shravan. The bigger challenge is on the EBITDA. The bigger challenge is more on EBITDA. Yeah, it looks like the possibility of close to 400 odd crores that we have indicated at the start of the year could still be a challenge. The numbers we would probably revise downward. By how much, we would probably take some more time before we could guide it, but we definitely expect the EBITDA generation to be a lot lower than what we have indicated. On the volume front, as I mentioned, I think we should be very close to 5 million. But I think end of the current quarter, we would be in a much better situation to narrate the numbers that are likely to happen in the current financial year.
Yeah, sir, I was about to come on the EBITDA part. So in terms of the particularly as you mentioned, it is difficult. Guidance can be revised downward, but still in terms of the power and fuel, the increase seems to be a significantly higher, because last time we said it should not be that much. So now how do we see this Q3?
No, Mr. Shravan, now let me reiterate what we have indicated at that point of time. The drop in fuel prices are expected middle of this current quarter. So we are more than hopeful that we should definitely save around 250 rupees per ton on the power and fuel alone for the current quarter. Because the mix what we have indicated earlier, where the domestic coal and petcoke was 50-50. Now we started firing at 60-40. So we are more than hopeful, and we do have the domestic coal pipeline with lot more clarity. And we are very sure that we would be saving around 250 rupees per ton only on the fuel for the current quarter itself, Mr. Shravan.
And this will further increase in the fourth quarter in terms of those savings. Hopefully.
I think let us take one quarter at a time, because as I mentioned even in my opening remarks, though some of the petcoke prices have been they trended down for a very brief while, again they are trending upwards. So at this point of time, Our inventory for the fuel is for the current quarter. We know with lot more clarity about what we can do for the current quarter. So we are very sure that we would be achieving around 250 rupees per ton on a power and fuel this thing for the current quarter at 250 rupees per minimum saving is possible for the current quarter alone. Next quarter, I think we will take it as we come close to those.
Yeah. And just to reconfirm in terms of the net debt, so 850 odd crore, that would be the operational net debt. That guidance we will maintain. And
yes, sir. I think on the balance sheet items, I think the narration remains very similar to what we have maintained even in the past, sir. So.
And sir, any update on the Andhra Cement NCLT? Because last time we said mostly September, October.
Yeah, I think we did mention that it is end of Q3. I think we are hopeful that it should get resolved before the end of Q3, sir. So we are maintaining the same time.
Okay. And sir, couple of points. What was the trade share for this quarter? And in terms of the post September, and have we seen any price increase in any of our markets?
Yeah, the trade sale got reduced for the current quarter. Obviously because of the monsoon, so there was a bit of more non-trade sale. We are maintaining around 57% is the trade, and the rest constitutes the non-trade. Going forward, again, we will revert back to 65-35 kind of a trade non-sale mix. Now, coming to the realizations, yeah, there has been a good uptick again on a relative scale across the markets that we service. Hyderabad market alone, we have seen almost a 18 to 20 rupees kind of a jump per bag. Vizag is around 15 rupees. Bangalore is 25. Yeah, we have not seen major shift in North Karnataka markets. North Tamil Nadu and South Tamil Nadu is around 25 rupees. Maharashtra markets, we have seen 20 rupees kind of an increase for ourselves. Odisha, we have seen close to 10 rupees. Indore, we are yet to see any major shift in our realizations.
Okay, so this is from the September exit.
Yes, sir. It is the exit of September to the first 15 days of October.
Okay. That's it from my side. Thank you and all.
Thank you.
Thank you. Anyone who has a question may please indicate by raise of hands.
Yeah, Manish, I think there is a question in the chat, which if you could
yes.
take it.
Yes, sir. So the question is from Rituparna Ghosh. Can you please elaborate your fuel mix going ahead? Are you exploring Russian coal? If so, how is it affecting in terms of production? And kindly give your views on thermal versus petcoke usage.
Yeah, I mentioned we are primarily using the domestic coal along with the domestic petcoke. Of course, we did receive an imported petcoke shipment recently. But as you have noticed, as probably what you are seeing is that the imported petcoke prices slowly started going upward. The last shipment that we received close to around a month back, or close to 20 days back, yeah, the landed cost was around $169. Now we are seeing the spot prices and the 1 month November deliveries are already at 195. So we are again going back to the domestic petcoke. The mix as indicated, we would be 60% domestic coal and a 40% petcoke. We are not using any Russian coal. We are basically sticking to the domestic coal along with the domestic petcoke at this point of time. Yeah, we did indicate even in our presentation the prices, typically the landed prices at Mattampally, though that's not our cost, the indicative spot prices which we have estimated part of our presentation, where we did indicate the imported petcoke prices per kcal to the domestic and imported. Yeah, it's on slide slide number what we have indicated here. Yeah, we have indicated that imported petcoke is at 2 rupees 53 paisa per kcal on a landed basis. Indian petcoke is at 2 rupees 20 paisa. Imported coal is at 3 rupees 37 paisa. Domestic is at 1 rupee 82 paisa on a landed basis at Mattampally. I mean, these are more indicative prices just to sum up some of the questions that you have had.
Thank you, sir. The next question is from Arun Narendranath. Apart from Andhra Cements, are you targeting any other inorganic acquisition?
It is too soon for me to comment, sir. Yes, we did identify a couple of assets, but we would want to take one step at a time. So currently we are more focused on Andhra. Yeah, the outcome of that would decide for the other options that we have. The target is to reach to 10 million. Based on the progress of Andhra, we would want to pursue the other options that we have. Yes, we do have at least another asset in our radar, but the outcome of Andhra would decide how we would progress on the other one. There was also another question from the same gentleman on the PIL. I think there is no PIL, sir. It is Dalmia who has given the thing, and there is no stay on the process. There is a stay on voting. So that I think is for the state. The outcome of that would be known only end of this month. But for that, I cannot comment anything beyond that. We are more than hopeful that at an NCLT, the Andhra transaction should get concluded, or there is a possibility that it should get concluded before end of Q3 is what is the impression that we have.
Thank you, sir. The next question is from Abhisar Jain. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. Sir, just continuing from your comments on the realization part, as you mentioned that you're seeing some uptake in some of the markets. So as things stand today, sir, what kind of realization per ton improvement do you expect on a quarter-on-quarter basis for Q3?
See, we just know the last 15 days trend, Mr. Abhisar. I did read out the indicative gross prices at the retail level.
Right.
If you knock off close to around 30% of that, that should get added up again on a weighted basis, but it's too soon for us to comment on that. Fortunately, except for Indore where it remained flat, and we are hoping the realizations to move even there. The realizations have been in range of anywhere between 15 to 20 rupees on an average per bag. So 200 rupees to 250 rupees per ton can be expected if it remains in a similar kind of a thing, but this is not enough. Yeah, a lot more has to happen. But the first 15 days trend is that it is around 15 to 20 rupees on an average per bag increase in realization is what we have observed.
Right, sir. Okay, understand. And sir, on the cost side, while you mentioned that the savings on the power and fuel, what you're expecting on a sequential basis, for the other cost line items, including freight and RM, do you expect to drive any savings for H2 versus H1?
See, Mr. Abhisar, raw material again is a question of blending. Per se, it did not increase our cost, but since the blended cement portfolio went up, which is a good sign for us, that much increase in raw material is seen. The offsetting price reduction, power and fuel cost reduction also is likely to happen going forward. Freight, as we have indicated in our own presentation, yeah, we are slowly coming down. And with the more volumes ramping up both at Jajpur and Jeerabad, likely that the freight cost should come down well for us. So by how much only time will tell, but definitely they would be trending down for us.
Yeah, sir, actually I just wanted a little bit understanding that where should the freight stabilize when we really reach that, 5 million and then for the next year, 5.5 million kind of run rate, because you have had new plants which will ramp up. Okay. And I think now you must be seeing some trends of the fuel prices stabilizing, which impact the freight cost. So if any indication that versus the today's level of around 800 rupees per ton, where do you want to see?
See, right now we are at 797, sir. I mean, this is, we don't know if diesel prices would stabilize, but with the current trend, what we are looking at it, yeah, it remained at 797. There was a small increase that purely because of small increase in the lead distance. But once both the assets ramp up, we are reasonably sure. From earlier 300, we have indicated that we would be going close to around 280. I think that is where we might land up. How much potential saving we would have? Again, if diesel remains where it is, probably we should expect around 50 to 60 rupees per ton kind of a saving. But that is very subjective. It again depends on the route maps and the tollages and all. But the indicative number is close to around 50 rupees saving should be expected once all the new capacities get ramped up in its full shape.
Sure. And sir, just the last thing on the Andhra asset and the overall debt number that we have of around 1170 crore. Just wanted to get the right sense on exactly how much of that is earmarked for the Andhra asset and maybe deposited by us.
Yeah, 500 crores is what we have earmarked for acquisition, sir. So that is what you need to exclude from the overall kind of a long-term debt.
Right.
What we have.
And sir, you have indicated in the past that if at all in a unforeseen scenario of this asset not coming to you because of any whatsoever reason, I'm not going into the litigating matter and Dalmia coming into the picture, etc. But for any reason whatsoever, if it doesn't come through and you're saying it will get decided within this quarter, and what's the equity upside on this 500 crore that you may have?
Sir, I cannot comment anything on those issues. There is always a possibility that the asset could go to any one of us. How much, what and all, only time will tell, sir. So it is too soon for us to comment on that. We would be very happy coming back to you as soon as we reach to a point where we could disclose those numbers.
Okay, but sir, only one clarification. If it were to go into a bidding sort of a thing, are you open to revising?
Sir, it is in that process only, sir. So it is not. It is actually into that process.
Okay, and so now you have the option to, of course, increase your bid or walk away, is it?
Sir, the process is ongoing, sir. So nothing is concluded as we speak. So the issue of upping or downing doesn't arise. We are still part of the process. So the process is yet to conclude, Mr. Abhisar.
Sure, sir. Understood. Thank you. Thank you so much, sir, for answering.
Thank you. The next question is from Shravan Sir. Please go ahead.
Thank you, sir. A couple of things, sir. First, in terms of the finance cost, so definitely this is increasing because of the 500 crore debt that we have taken from Andhra. So for the third quarter also, we will see the same run rate, and from the fourth quarter, let's say if materializes, then
it's a subjective issue. It's a subjective issue. See, we have earmarked 500 crores for the acquisition, sir. Yeah, if it materializes, that bit of portion would get reduced, and the reversal would happen. So that's what I would like to highlight, Mr. Shravan, at this time.
But at least for third quarter, at least 1.5 months, 2 months, the
yes, sir, I think it's a subjective issue, as I mentioned, for the outcome of the event. Yeah, it is basis that outcome. We are hopeful that we should conclude this by end of Q3. If that happens, yeah, I think the interest and the debt structure would get transformed accordingly.
Okay, got it. Second, sir, capex for the first half is 63 odd crore. I can see from the cash flow, but we were looking at only 30 odd crore. So, what's the new number for the full year FY23?
No, I think we have indicated the same, sir. It is because partly rollover of both the assets. That's what got indicated here, but we are sticking to 30 crores for our maintenance capex.
So in the cash flow, though it is a 63 odd crore on a consolidated basis.
Majorly it is because of the rollover that has happened from last year, sir. When we have commissioned, not everything has been capitalized. So those capitalizations have happened even in the last quarter or the first half. So basic that. So, but maintenance capex we would definitely not cross more than 30 crores, Mr. Chow.
Okay, got it. And the third clarification needed in terms of the petcoke. Whatever the percentage we are having, so currently 65, 66. So in that 70 odd % would be the domestic one. Is it a fair way to look at?
Yeah, yes, Mr. Shravan. See, we definitely got one shipload of 50,000 just 15 days to 20 days back. The landed cost is at around $169. That includes the hedging cost and everything. But for that, rest everything is domestic petcoke. Yeah, if you look at Zeerabad, that is the Madhya Pradesh. The entire thing is domestic. It is coming from IOCL Vyali, that is the Baroda plant.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from Parth. Please go ahead.
Hi, sir. So, thank you for the opportunity. I just had one question. So, I wanted to know, what is the optionality at each of our 5 plants that we have? From there on, from current capacity, is there any room for, increase our capacity?
Yeah, Mr. Parth, see each of our asset, again, Mattampally and Gudipadu has ample scope for, Mattampally has huge scope. We have fairly large limestone resources. Gudipadu, we could comfortably triple. Sadguru, there is scope for small increase, at least to an extent of 500,000 on the cement side. But clinker, we are uncomfortable if it is less than 40 years or 50 years of deposit life. So clinker scope is very limited at Sadguru. But in Mattampally as well as in Gudipadu, as I mentioned, Gudipadu, we could, from 1 million, we could comfortably go up to close to 4 million. In Mattampally, scope is huge. But we have taken a conscious call that we would only do it after some time. Because given the south, adding a brownfield or a greenfield in south, not only would put pressure on us, but also on the market. So that is what is a conscious decision that we have made not to look at those options at this point of time.
Hello?
Yeah,
Parth, please, go ahead.
So basically, we can add, we would want to add at Gudipadu, rather than Mattampally.
So if at all, if we have to add, the first priority would be at Gudipadu in south.
Gudipadu, fair enough. And sir, just wanted to understand what would be the brownfield capex cost at current,
Sir, it is very, very difficult to address that. It could be anywhere between $80 to $100 at this point of time, because the steel prices are at an elevated kind of a level. So is the services cost, sir.
Okay. And sir, just to quantify a number at Mattampally would be how much, optionality?
Sir, it's huge, sir.
So basically the land and everything is everything
yes,
is bought. Limestone
yes,
availability is there.
Yes, sir.
Just to still put a number, if possible.
Sir, I think, we have indicated close to around 420 odd million tons of limestone is there, which is readily available. With a potential increase, it could go up to 800 million. So with the 800 million limestone, you can see to what extent we could go. So
fair enough. Done, sir. Thank you so much. That's it from my side.
Thank you. So a couple of questions on the chat window. So what is your lead distance for the quarter, railroad mix, and what is the demand potential from Telangana and Andhra Pradesh, and what is the fuel inventory?
Yeah. Now I think we did disclose in our presentation reasonably in a detailed fashion about the railroad mix and the lead distance, but let me read out since it is asked. The current lead distance for Q2 is at 271 kilometers. The railroad mix, we did indicate the Jajpur movement is mostly by rail in terms of the outward. But for that, except for the clinker movement, we have not done any rail movement on the outward freight. Only the inward, which is primarily to do with the clinker and all, is going only by rail, both to Jajpur as well as 80% of it to Bayyavaram went by rail. Coal inward, of course, from Singareni, mostly it is by rail. So that sums up. Now looking at our own volumes in terms of for each of the states, sir, we did close to 1.04 million. Out of that, close to 50 odd % is for AP and Telangana. We did close to 16% into Tamil Nadu, 9% into Karnataka, 6% into Maharashtra, 7 each for Orissa and Madhya Pradesh. And there is a 1% to all the other remaining states where we would have supplied SRC cement, sir.
So one more question. What is the fuel inventory that you are carrying now?
Yeah, the fuel inventory, we are running at, for the full quarter, we have the inventory, sir. This includes both domestic as well as imported and domestic petcoke. We are running with 1 quarter.
Okay, sir. So next question is from Viraj Kulkarni. Our Indian coal mix was 30% for this quarter. Despite this, the power and fuel cost was in excess of rupees 2,000 per ton, which seems to be quite high compared to the others who have reported.
I cannot compare with the others. In our case, the power and fuel cost got elevated purely because the CPP, which consumed coal, there we had to go for expensive coal. We have taken a conscious decision to switch off the CPP and go back to the grid because it was costing close to around 12 odd rupees per unit. That also has increased the overall kind of a power and fuel cost. Yeah, we hope that the trend lines would put us in a better state in terms of the coal availability as well as the pricing. That is not the case, sir. So that probably has pushed us to be slightly higher compared to some of the peers. Also, you have to look at the blending ratio. Though we did slightly higher, but still we are close to 50-50. I think the minute we get aligned, which is not very far, that once we get aligned with most of our peers in terms of same blended cement ratios as they would, our power and fuel cost also would be looking at a lot lower than the others, sir. But in our case, it definitely impacted power and fuel cost for the last quarter. Did impact the overall kind of the coal usage and the availability did impact the overall kind of a cost. But we have made those decisions now, and we are more than hopeful that in the current quarter itself, we are expecting a 250 rupees saving on the account of power and fuel costs.
Okay, got it, sir. Sir, the next question is from Rashesh Shah. Sir, can you please give us the volume breakup between the existing and the new units?
Yeah, we will be sharing that, sir. We did for the quarter. Yeah, we did close to around half year. We know for sure. Yeah, we did close to 250,000 between both the units, sir. Around 70,000 tons from Jajpur and 190,000 tons from Madhya Pradesh for the first half.
Q2 MP 77,334.
Yeah, the Madhya Pradesh unit for Q2 is 77,000 and for Jajpur is 35,000 tons from Odisha units.
Okay, thank you, sir. The next question is from Rajat Setia. What is the capex left to be done and by when this will be complete? How much capacity expansion will happen because of that? And also, what is the capacity that we are looking to add from Andhra Cement?
Yeah, the capex as indicated, sir, for both the assets, it is completely done. That more or less concludes the capex spend on the assets that we have at both Odisha and Madhya Pradesh. The only small operational capex that we are doing is around 30 odd crores. I think we did close to 10 odd crores. Another 20 crores probably would add up in the next 6 months on this account, because there is a large shed that is under implementation at Mattampalli. So that is what we are looking at this point of time. Now, from a diligence perspective about what we have looked at Andhra Cement, sir, it's a 2.6 million ton. That's what we are hoping to get added up as soon as it gets fructified in our favor.
Got it, sir. Thank you. Anyone who has a question may please indicate by a raise of hands or on the chat window. Put it on the chat window, please. So in the meanwhile, I have a couple of questions. So last time you had mentioned about Singareni coal, there were some certain issues on supply. So have they been sorted now? And
yes, sir. They have been more or less sorted. Though the rains are still troubling a bit, but from a connectivity perspective, we did receive good volumes in the last month, and we are hoping most of the FSA Singareni to start fulfilling the entire FSA obligations from their end going forward, Mr. Manish.
Got it. Sir, and your view on the new capacities that are getting added, plus the M&A activity that is happening in the central region per se. Do you think that over a period of next 1 to 2 years, you might see a lot of capex there with also, older plants getting revived and things like that? That might add pressure to the central region.
Yeah, Mr. Manish, I think the central region, more so UP, because that's where the action is in terms of, we are expecting a huge demand to pick up in UP. Fortunately, the demand looks to be far higher compared to the potential supply that is likely to happen. See, a lot of people assume that the JP is not working, but the fact is that JP is working, probably at a lesser volume. So the incremental volume that is expected from ramping up of that is probably should get absorbed in no time, because the demand looks to be in a very, very high scenario. Of course, Amethi and JK's plant both are likely to happen probably in the coming year. But by the time these assets come up, we believe that demand should be in a good situation to absorb whatever is adding up. Usually the supply and demand equation in central was always favoring more demand and less supply. Probably the gap would get narrowed down when all these things get commissioned. But from the way the UP demand is shaping up, we think that the old trends might probably continue even with the new supply. Things look to be more promising than ever before, Mr. Manish, as far as central region is concerned.
Got it. So any particular segment that is driving demand there? I mean,
I think it is government spend mostly on infrastructure side.
Okay. Got it. So that's it from my side. Next question is from Shravan. Please go ahead, Shravan.
Sir, just wanted to understand, do you are hearing or have you witnessed in terms of the discount structure being slightly modified by the large players or some of the competitors in your region?
Yeah, Mr. Shravan, I think it's an ongoing affair. People keep changing the names of those discounts, but the reality is that some amount of the RD, PD or whatever people would call, some amount of rationalization, I would put it. A lot of knocking out has happened on those fronts, but it's not just now. It was the case for last couple of quarters now. We are seeing some reductions on those RDs and PDs in our region too.
Okay, that's it, sir. Thank you.
Thank you.
Anyone who has a question may please indicate by raise of hands or put it on the chat platform. The next question is from Debatru Sinha. Under the Gati Shakti Master Plan of Government of India is launching the Unified Logistic Interface Platform, which promises to reduce the overall logistics cost by 10 to 12%. What is the impact on Sagar Cement's freight cost and cement industry as a whole?
Sir, I think it's a great platform and a great policy document, but it's on the overall kind of a logistics. What kind of impact it will have on cement? I think it is very limited, sir. In our own case, we are not expecting that to save in a big way because it's a multimodal. The problem is not with the freight alone, but the problem is with the handling costs. So in a multimodal scheme, typically if you have more number of handlings, it may not come to our rescue. So we would rather see, we have been looking at it. I would not say that we have looked at it completely, but we would want to take some more time before we could make a conclusive kind of a remark. But from the brief overview that we have had and some discussions we have had with the experts in that particular segment, in our sector, the bigger challenge is at the handling side, sir. So on that front, we are not expecting a major saving for ourselves. I cannot speak about the industry. There are some things that we have seen with the cargo, the bulker transport, container transport with the rake and all. We do think that there is some saving, but we have not really done calculation for ourselves because that may not be a fit case for us. At the industry level, we do believe like Bharti just launched one of its kind of a model basis that I'm sure if they have launched, my assumption is that it definitely has some advantages. That's the reason why they have launched. In our own case, we do not have assets which would add value from that perspective at this point of time. So from our side, it has. I don't think we had. It adds value to us at this point of time. That's what we would like to comment on that.
Thank you, sir.
Thank you. Sir, the next question is from Nikhil. What is the outlook on demand, especially in the south region?
Sir, outlook on demand, typically, again, I have to go back to the history. 2 years before the election, it peaks. So we are just getting into that second year from next year onwards. So we do believe that we are in good time as far as demand is concerned. But for the rain for the current year, sir, most of the states have actually performed 20% higher than last year. We do think that by next year, first half, we should be crossing pre-COVID kind of levels for demand in most of the southern states.
Okay, thank you, sir. Sir, the next question is a follow-up from Rajat Setia. For Andhra Cement acquisition, how are we looking to finance that, and if it was to come to us?
Sir, I think we did raise equity as well as a debt. I think that should more or less help us with the internal accruals acquire the assets, sir. So we are reasonably fully funded for a potential acquisition, and more so from an Andhra perspective, I think we are fully funded from that perspective. We took a 500 odd crores of structured debt. We also raised a 350 crores of equity from Premji Invest. And we do have some internal accruals. I think these three should help us acquire the assets.
Okay. So, does that mean that the current debt levels should be at the peak
Yes,
level?
sir. More or less. Yeah, more or less the debt levels are fixed, sir, because there is a 500 odd crore of debt, which is more for an acquisition that we have borrowed. So that should help us get the target.
Got it, sir. The next question is from Prakhar Porwal. Please go ahead, Prakhar.
Hello, sir. Like as you mentioned, demand outlook in South India. So basically, I had a follow-up question regarding that. Like as we have seen in the last decade, demand in South has been stagnant and not has increased on an overall economy level. So just wanted to know, like with the capacity utilization that Sagar currently has of 49% overall in India. So basically, the current consolidations that are happening, how does Sagar aim to, like what actions or what has it thought to maintain or to increase those utilizations amid this stagnant demand in South India?
See, I think what you're looking at 49% is very specific to the last quarter, Prakhar. The reality is we would be operating anywhere between 55 to 65. Let me take 1 year forward, not go beyond that. Yeah, we do expect more or less the capacity utilizations to remain where they have been for last few years. We are not expecting a major shift in that, purely because there is an incremental demand. See, contrary to what most of the people think, South did grow, sir. It's not that it remains stagnant, but supply also had caught up with it. So given the supply position at this point of time, for at least next year, we do believe that the capacity utilization more or less would be very, very similar to how it has been for last few years. Beyond that, we do expect an incremental kind of a demand. Unless some unusual supply comes into the market, there is a likelihood there could be a small surge or increase in the capacity utilization. But I think 80% capacity utilization is 100%, near 100% in South at any given point of time. Just to reiterate, sir, in FY11-12, the demand in South was 65 million. Pre-COVID, that is FY19, the demand reached to 81 million. So it's not that it remained static, it grew. But so is the supply. So that's one of the reasons why the capacity utilization more or less remained static. Not that demand was bad, but supply was more than the demand that got added up. And we do believe that next 2 years we should go back to the peak number that we have witnessed at around 81 million. Probably, if not this year, at least by halfway through next year, we should start seeing those numbers is what we think. Because that was the trend. Looking at the historical patterns, yeah, a year, 2 years before the elections, most of the supply starts, demand starts picking up quite sharply. So that's what we are expecting even this time around.
Okay. Thank you.
Thank you. So the next question is from Arun. Does the upcoming Delhi-Mumbai expressway near Dahod help Sadguru plant to supply cement at the lower cost for the catchment area?
For sure, sir. But I think our footprint area has Indore and Baroda and Ahmedabad are also not far, sir. So it will definitely help. We don't see challenge with the demand in those regions. It's a question of realization. We are not seeing any issues with the demand for our asset because it's just a 1 million ton plant, and the captive markets are reasonably strong there. So this will definitely add up. Will it make a difference? Yes, but to what extent is a question to ourselves.
Thank you. So the next question is from Rajat. Do we have any target for rail dispatch mix, lead distance, blended cement mix for the next 2 to 3 years?
Yeah, we do not have a target for the rail dispatch mix, but we definitely have a target for the lead distance. As indicated, we are targeting at 275 kilometers for us to achieve that number. Fortunately, the current assets with even the road mix should help us reach that number. From a blending perspective, sir, we were always sub 40 all these years. Yeah, we are looking at a 70-30 kind of a mix where 70% would be the blended over next couple of years. 70% to be the blended cement and 30% to be the OPC. The reason why we believe that OPC will still be there is because some of the large institutional buyers would still prefer an OPC for them to do the blending. So that's one of the reasons why we are not ruling out completely the OPC. Our internal target is to achieve 70% blended with a 30% OPC mix. Rail dispatch again is subject to the markets that we service and the overall kind of a logistics cost that it is likely to save. So we go with the overall kind of a cost, not fixated on the rail dispatches. Most of the markets that we are servicing and the assets that we have, I think rail is not a big option for us. Road typically has given us the best kind of a freight rates into the market. That's one of the reasons why we are one of the lowest cost freight operators in India for the cement.
Thank you, sir. The next question is from Jashandeep Chadha. Please go ahead.
Hi, sir. Thanks for the opportunity. I just wanted to ask and understand what sort of limestone reserves are we getting with also on the basis of the land package that we are getting in limestone reserve, what sort of brownfield optionality do you see in Andhra Cement? Thank you, sir.
Yeah, Chandra, we are yet to get it. So we are one of the other person who has bid for it. Andhra, as indicated, has close to around 165 odd million tons of limestone, sir.
Okay, thank you, sir. Thanks so much.
Thank you.
Thank you. The next question is from Rajan Shah. What is the market share of Sagar Cements in India?
Yeah, I think I would request Manish to address that question rather than myself or my friends who are strong analysts who look at all India as the market. Yeah, our assumption is that we are 5 million on a 425 million supply, sir. Is it supply driven or a demand driven? I have never understood, but yeah, we would be close to 5 million with close to around 0.9 to 1% kind of share in the overall kind of a demand.
Thank you. So the next question is from Ramkrishna. With the improving road infrastructure across the country, have you seen consistent efficiencies coming in way in terms of overall logistics cost?
Sir, I think the issue there is the efficiency has helped us. Turnaround times have come down quite heavily. That obviously indirectly helps us to reduce the overall kind of freight cost. But what one has to keep in mind is most of this infrastructure is happening with tollages, sir. So there is a net negative effect on the overall kind of cost even on that. Turnaround times definitely have come down, sir. Earlier, when I started my career, it used to take close to around 15 hours from our plant to Hyderabad, which is 200 kilometers away. Today, it takes less than 5 hours to reach. So there is a huge kind of the carrying capacity definitely has gone up from what was sub 20-25. Today, people are talking of near 50 to 60 ton carrying capacity. So these things would definitely add up. But unfortunately, on a shorter term, the infrastructure built up also is happening with the tollages. So that more or less is negating the overall kind of cost. But this could be a short term, but medium to long term, we definitely think it will save quite a bit.
Okay. Thank you. So the next question is from Vincent Andrews. How much would be the cash outflow for Andhra Cements towards acquisition and subsequent capex on that?
Sir, it is too soon. So we are in the bidding process. We would be very happy as soon as it reaches to some point. We would be happy discussing that. At this point of time, it's in the bidding process. So it's too soon for us to comment on that.
Thank you. Anyone who has a question may please put it on the Zoom platform or raise your hands. So as there are no further questions, I would now like to hand over the call to you for your closing comments, please.
Thank you. We would like to once again thank you for joining on the call. I hope you have heard all the answers you were looking for. Please feel free to contact our team at Sagar or CDR should you need any further information or you have any further queries. We will be more than happy to discuss them with you. Thank you and have a good day. Thank you, Manish.
Thank you, sir.
Have a good day.
Thank you. That concludes the call for today. Thank you, everyone.